55.35 up from 46.25. That's a big change. Can we start there? What changed?
That is a big change. So we knew we were going to move numbers higher. We just didn't know how much higher, because I didn't know. We looked at things last year and we were expecting the market to be up 10%, maybe 15. And we couldn't figure out, that was pretty good at the time, but we missed the market by 10%. What we figured out is the market's just being a lot more aggressive on how it's discounting. It's discounting a lot further into the future, and it's using a much more aggressive forward multiple. And so when we took that into consideration, we realized, hey, we can get to 270 on 2025. We can use a 2021 multiple, and that gets us over 5,500. And so that's really how we got there. And what we think is going to happen is not the economy is going to be really strong. It's a mix shift. The winners are going to keep winning, and the more profitable companies are going to make up a bigger percentage of the S&P 500, and that's how you're going to get there.
So within this is a big core bet on mega cap tech.
Mega cap tech, but really more profitable companies. A lot of the mega cap tech are those, but it's not every single mega cap tech is a profitable company. But yes, along those lines.
Is there anything in the earnings that you've seen or the spending by said companies that makes you concerned?
No, what makes me concerned is we really haven't learned anything new at this point in time. Consumer, still value-oriented, still selective. High-end's doing better than low-end. Kind of knew that. People like to travel, services over goods and things. We knew that as well. Economy's a little bit stronger than expected. Not new news. What we're waiting for and what we're looking for and what we think is this AI spend, it's not a discretionary spend. And we'll see that going forward. Maybe that's part of what we saw last night. And what we think is, again, you're going to have a separation. You've already had that separation between the winners and losers. That separation is just going to get bigger and bigger and bigger.
The separation has been in earnings returns, but it's also been in earnings, right. Just straight out. We saw Southwest, for example, coming out earlier this morning, underperforming, wider loss. You say people like to travel. There are signs that that's actually being challenged on the margins. We just got results from American Air, similar type of disappointment. Right. How much does this make you shift some of the companies that you like? Is this basically a bet that the cash winners and the AI darlings can keep going, but the broadening out isn't going to happen?
Yeah, so Lisa, there's a lot there, right? If we look at Delta, Delta's a lot different than Southwest. And Delta had a lot more positive things. It's a higher-end consumer. It's also more business-oriented, right? What do we like? What's going to change? Well, the bigger question is we see two trades in the marketplace. It's the momentum trade and it's the reinflation trade. And I think that momentum trade will continue because, again, the winners will keep winning. As far as our positioning, what we want to do and what we've been doing for the last year and a half is we want to barbell communications with something more defensive. Now what we want to do is barbell communications with healthcare or utilities. We want some balance. We want some protection in that portfolio, but we do want to participate to the upside.
If the Fed doesn't cut this year or only cuts once, how do you change your target again?
Don't change it at all.
Really?
Right? Yeah, because the reason is if you go back to 21 when the Fed was way too aggressive and then you roll into 22, you ran into a buzzsaw. Why was that? Well, you were too accommodative in 21 and then you turned everything on its head in 22. Well, you're not going to see that going forward. You're going to see a Fed that's going to cut. It's going to be a multi-year cut, multi-year easing cycle. And that continuity is going to help. What else is backing that up? This secular AI trade is not going anywhere. It's actually broadening out to power, to electrification. And then the M&A story keeps getting better and better and better. So whether it's one cut, two cuts, three cuts, we don't care because it's the start of a bigger cycle.